Good afternoon, everyone, and welcome to a live recording of Today in News Tech, the podcast covering digital innovation in journalism. We will be starting the podcast momentarily. Please take a moment to locate the chat box on the Zoom control panel. Submit any questions or comments you have throughout the interview. Today we have a very special guest joining us. Arvid Tchivzhel is the Managing Director of Digital Services at Mather Economics and is the author of the article, Sustainable Digital Business Models for Newspapers. Research shows the potential of digital reader revenue. Please join me in welcoming Arvid to the podcast, as well as your host for today's interview, Matt Larson.
Okay, that was
Good
audio
afternoon.
articles. So anyone interested in adding that to their website, just contact us at our hometown, of course. But welcome, Arvid. It's great to meet you. Thank you for taking the time to join us for this conversation today.
Yeah, thanks for having me. It's been I've heard a lot about the podcast, and I'm glad the story has some relevance. And I'm particularly impressed by the text to voice that they got my last name right.
That was going to be my first question, actually, and I meant to ask you before I played it, but we just kind of got started here because people are joining. So, yeah, that's a neat tool that we have to offer publishers to try to improve the digital experience, as you talk about in your article. Sustainable digital business models for newspapers. So let's start off here and get right into it. Could you just give us an overview of this study and kind of, the summary and, what the lessons were from this article?
Sure. Yeah. So really we get this question a lot just as in our role as, partners with a lot of media companies. We get the question of, what is our opportunity? What should be the target for setting, the next year, next 5 years for digital subscriptions specifically. And what we've done is kind of try to answer that best we can with data as we do. So really the kind of takeaways for the article are, there's sort of a range of opportunity depending on where you are in kind of the maturity life cycle of your subscription, of your digital subscription product.
Right.
And we have some benchmarks that show, in year one, this is approximately where we think you really ought to set your goal all the way up to year 10. And then you have leaders like New York Times, Wall Street Journal, who are kind of in a different class, but they've reached as high as 4 or 5% of their monthly uniques converted to subscriptions.
Right.
So we can try to put some numbers to that question of what is our opportunity. And we share some just benchmarks here and just a hypothetical exercise of, if you were a 1 million unique user newspaper, what should be that kind of shape of that growth, and what would you expect to be the target in digital subscriptions?
Right. Okay, excellent. Appreciate that overview. Yeah, and so what I was kind of thinking is I think a lot of the people have already read this article, so we'll just kind of go through the graphs and, the major bullet points here. I do want to talk, I want to mention right up front, most of the publishers we work with are on the smaller side, very small weekly newspapers. So just to set that context, I know a lot of the numbers, you just mentioned 1 million monthly uniques as kind of like, a milestone figure that you use in a lot of these. I'm wondering if we could maybe, if you have any data on the lower level, around 100,000 monthly unique page views, or any insights you can share on that.
Sure. Yeah, we do, and it's interesting. There's kind of some weird things that happen at kind of the extremes of the different size newspapers or websites. So in some ways, even though they're small in terms of volume, they reach usually a larger share of the audience. That's kind of one big observation, is that if you have a kind of a hyper local brand that is the brand for a particular geography, you're able to attract a pretty significant share of audience to your sites. So in some ways, that ratio, of how many subscriptions to uniques can you get, that's actually a little bit higher on average for the smaller newspaper than perhaps the average metro or even the large metro. So in terms of benchmark, I think it's still applicable in terms of that ratio of monthly uniques to subscriptions, but setting that target to maybe even 2 or 3% in the first couple of years of a subscription product, that's usually a good place to start. Then obviously there's market dynamics, and if there's competitors, or if there's legacy print footprint that can kind of augment that analysis.
Interesting. Yes. Well, so this is something that I have kind of toyed with, this idea of putting together, basically an algorithm to predict, how many digital subscribers they should expect. And we do see publishers even today launching brand new websites. They've never had a digital presence. So these numbers, are especially the graphs that we'll look at later that look at, the time scale, years into launching the digital subscription. We'll want to look at that. But let's just start at the top here. You mentioned subscription prices seeing a 400% increase across all platforms in the last 15 years. Digital only prices increasing 9% in the last 12 months alone. I guess the idea being a lot of that is behind COVID and the shutdown and everything.
Yeah, it's also, I think the price trend to me shows that there's a demand for it and willingness to pay. So I know, we in our experience, when we first started working with newspapers over a decade or two ago, the print pricing was pretty low as well. I think in some ways that was due to the advertising revenue kind of subsidizing your print subscription revenue.
Right.
As the print advertising revenue really went away or decreased significantly, there was this pressure to raise the print price. And there was a lot of reticence, I think, from a lot of newspapers, large and small, to push that print price.
Right.
What we found was essentially there's a pretty inelastic relationships, which means you can be pretty aggressive on the print price and not see significant stop due to that price. Now, again, there's a way to do it intelligently, and it's not an across the board thing. But what this chart is showing to me is basically there's a similar, maybe not quite at the same, total price point quite yet, but there's still a whole lot of opportunity and willingness to pay for the digital product as well. And I think there's kind of we still see a little bit of reluctance from a lot of newspapers to price through digital subscribers and to be aggressive on price, but I think there's still a lot of opportunity to do that. And again, if you're doing it intelligently, if you're not, if you're letting them kind of get through that first introductory period, building engagement, investing in the products, that price increase is, a very small part of that reason people stop. So
interesting. Yeah, I mean, this is something that we talk to publishers a lot about, and it's kind of been an ongoing joke from, a lot of my interactions with publishers. They joke about themselves that they're not very good at selling themselves and, their product. This price range, is this for what size newspapers are we looking at? Because again, we mainly work with the weeklies, but this is in the range of what we recommend for a monthly subscription.
Mm-hmm. So yeah, this is really kind of a blend of large and small. So it's to your point, perhaps with smaller publishers, there's a bit more price pressure, just if it's in a different, depending on the community or depending on if it's a weekly or daily.
Right.
I mean, I think $10 a month is probably kind of the minimum, I'd say, is kind of the full rate that you would set.
Right.
Again, discounts and promo periods aside, you can do whatever you want there in terms of a 6-month trial or a 3-month, for $1. So there's all kinds of creative ways to get, that initial acquisition volume.
Right.
But what we find, and this testing has been confirmed in a lot of newspapers, is, you see, like the Boston Globe is an example, which is again a pretty large newspaper, but they're up to $1 a day in pricing. So that's we think there's still that opportunity for even the smaller publishers. Again, not overnight and not across the board, but over time to build that loyal digital subscriber base, build that engagement, and then over time grow that ARPU as you see the volume start to decline a little bit. So,
right. Interesting. Because the volume, you kind of settle into the saturation rate, I think, as we'll talk about in a minute. But okay, aggressive on price. Yeah, I mean, can you give us just some practical, like, in the past, I've kind of used as a starting point the print single issue price. They charge $1 for a single issue, and they're a weekly. So I'll base the pricing kind of roughly off of that. Is there any kind of model that you would suggest like that, or would you just say $10 is the starting point, and we kind of like for the average newspaper? And for a weekly, we're going to discount it down to 9, and daily we'll go up to 12. You know what I'm saying? Like, is there some guide that you can give us, like some kind of algorithm for that, for pricing?
I can do my best to describe sort of how we approach that without getting into the deep math. But yeah, you can essentially back into, and there's a number of ways you can do it. I mean, there's if we're talking about setting that full price, there's competitor analysis. So kind of what is a lookalike newspaper doing, and what's that range? That's
Sure.
kind of one technique just to find a range of price points.
Sure.
You can do a conjoint study, although those have some constraints around. It's a survey, so there's kind of how well do you frame that question in the survey, and how well is that population sampled. So conjoint is helpful sometimes for like feature selection, or kind of on the margin, if you add this product feature or this bundle, should that be worth more or less than some other product feature.
Right.
There's benchmarking, which this is doing here, which is just sharing essentially what are publishers doing across the U.S.
Right.
And this can be sliced and diced by size as well. And then there's like I just mentioned, there's kind of ratios. You can think of like what's been the historical single copy price, or historically what's been a 7-day delivery price, or a Sunday only, and you kind of have a ratio based on that. I don't know if there's a specific number that's the magic number of, if your single copy is 1, multiply it by X. I don't think it's quite that simple, but there are benchmarks that we kind of triangulate. Sort of, here's a range of possible market prices that we think are reasonable, and then that kind of gives you a set of what's too expensive, what's too cheap, and then the other piece is the kind of optimizing for lifetime value. So if you have modeling around acquisition expectations and retention expectations under that price point, you can kind of balance the two. So if there's a model to build, and we built some of these for publishers, it's if you set a certain price point, what's the volume that you get from that price point? What's the retention rate on that price point? And then as you move that price up or down, how do those two things work together, and where do you maximize that long-term revenue? The last point that's interesting is the answer changes depending on how long your time horizon is. So if you're trying to optimize for the first year, it's a pretty tough math. If you have a 5-year, 10-year horizon, you can get pretty aggressive or in discounting that price initially, and have a long step-up period to kind of grow that ARPU over time. So it kind of changes the dynamics depending on if you're publicly funded, or if you have a certain trend in the advertising revenue decline. It kind of sets the expectation of at what point are you trying to maximize that revenue, year 1 or year 5 or longer.
Interesting. Right. Yeah. I mean, this is something that we talk about all the time. I mean, our basic recommendation is, you want to deliver as much value as possible to an active subscriber. So it's all access to the content, and we're enhancing it in any way possible with the audio articles, any video content that they can have. We, make sure to host it on the website behind a metered paywall. I mean, so just some really, I guess, general questions. The metered paywall to us is really emerging as like the model. I mean, would you say that was the dominant model in your analysis, or can you say, because it used to be kind of a hard paywall, was the recommendation, but it's moving away, I think.
Yeah, I think in the US, the metered paywall seems to be the most common. What we see in Europe is, we call it kind of a premium or freemium model, where it's I wouldn't call it a hard paywall, but there's some percent of articles that are always behind a paywall, and then some percent of articles that are free or metered. That's kind of been the model in Europe. Right. In the US, we're seeing more. What's more common is publishers are experimenting with setting more content to premium alongside a meter. So it's kind of a hybrid model of, you have a certain meter setting, across the board or by audience segment, and you say, 10 to 50% of my content will be always premium. If it's your best content, that is, your most valuable things you're producing. Right. The other trend that's emerging, and really this kind of last year, so it's been pretty rapidly gaining traction, is a registration wall. Yep. And that's where there's just a lot of, I think, value in getting that known user, or getting an email address. Right. Where the value is not necessarily the paywall, but it's more about converting that anonymous reader into a known reader. Then you can directly market to them through email, to newsletters, and kind of have a dialogue versus trying to close the deal on the website while it's still anonymous. So again, it kind of depends how long, what you're trying to optimize. If you're trying to optimize your conversions for tomorrow, then hard paywall, you'll get a lot of sales attempts to get conversions that month. But then month two might be pretty difficult. If you're trying to optimize long term, a registration wall works really well because you're building that base. You're investing in the product with the features that you mentioned.
Right.
You're also investing in customer touch points through email and building that loyalty. And then you get them maybe 3-4 months in, but it's a great loyal customer. So it's kind of, it depends.
Right.
The time horizon is really important in terms of what tactics do you optimize or prioritize first.
Right. Yeah, no, I think it is all about the timeline, the lifetime value, like you were saying earlier. And in our business, they're a fixture in the community. It's not like you have to lock them down on the first interaction by any means. There's plenty of opportunities for them to hear about your brand in the community, all kinds of things. We're doing projects like, QR codes, because, that seems to be in a weird way coming back as a technology, of course, because everyone's using them for their menus in restaurants. So, connecting people, just getting them directly linked into the website that way, whatever it takes. And yeah, gathering the email. That's a big thing that we push for on free sites. And actually, I think, it's probably too late to go back to that, but I want to mention some crazy models that we've seen, not crazy, just interesting, free print publications launching paywalls. Is that something that's in this mix at all? Or is this pretty much paid print and paid digital? Because we are seeing examples of that.
Yeah, I think our mix in the benchmarking data, it's mostly legacy print newspapers who launched paywalls and invested in digital. So I don't think we have too many of those kind of free to paid conversion in the mix. But no,
Gotcha.
That's a great point. And but to your point, that's that just kind of demonstrates that there is a sustainable revenue model there, and it's perhaps I think the tactics that we've talked about here so far, I think are all applicable, and even some of the benchmarks are helpful. I think to your point, I wouldn't necessarily say just because, a legacy newspaper has this price, the free to paid site should, aim to copy paste that same price. But that's perhaps just a benchmark or just a data point for them to figure out what that is as they go through the exercise of figuring out their market, figuring out the value proposition, how many articles they're producing, what are the product features that they have included, what does that LTV, lifetime value curve look like over time?
Right.
So,
Yeah. Absolutely. Yeah, we actually have a question here from Tyler. How do publishers typically, do you have any data on this? How do they determine what is behind the paywall? Like in the European freemium model, for example, I like to actually say the metered paywall in the US, it's like the user picks what's free. In Europe, the publisher would pick what's free. Is that metric driven, based on stats? How do they determine what is free and what's paywalled?
Yeah, that's a great question. And there's kind of two answers. So it kind of depends on the newsroom culture a little bit, and also just depends on the technology available and just how robust their data team is. So I think when most publishers start down that path, it's pretty much a gut feel, newsroom-led decision-making process where every day they're kind of saying, hey, we wrote these 10 articles, we think this one's probably the one to put premium. We're not sure. We'll try it. So that's where you usually start out. The more, I'd say, as you kind of start to build that habit or gain confidence that is working, or you're making tweaks in the process, we do see publishers using data to drive that decision. So we've actually, at Math Economics, built a recommendation engine just to kind of take into account the text of the article using natural language processing, the metadata of the article, and basically find lookalike articles that have succeeded in the past, and then evaluate in real time, hey, this article I'm about to publish, does it look like it should be premium or free? And within 1 minute, you can kind of tell, all right, this is what the data says. So at the end of the day, it's still a publisher decision or a newsroom decision, but we have that kind of, recommendation engine that kind of tells you, here's what you ought to be doing.
Right. Fascinating. Is that like an API that we could maybe talk about using on WordPress or what?
Yeah, absolutely. That's been out there for about a year, and we 100%. Yeah,
we'll follow up on that. Absolutely. It's along the lines of what we do for recommended articles, looking at the natural language processing, semantic relationships between articles and things like that. But using it to drive the paywall is really interesting. And something we covered recently on the podcast was actually this paywall technology that will try to predict whether a user is going to subscribe ever. And if they just sense that they're not going to, the AI tells them no, it actually will give them more free articles, because then they can at least monetize an ad network or something like that. I mean, you didn't talk about ads at all in this study, but do you have any comment on that kind of a paywall that's so dynamic? It's not even the same for any two people, like someone could get significantly more stories in that case than another.
Right.
I don't know about that.
And we built that model as well, by the way. So part of what we do is kind of on a per user level, essentially recommend this is, this person we think is likely to pay, therefore set the meter to 1 or 0. This other person is not going to pay. So, basically let them read as, 5-10 articles. We never say unlimited, just because it's, it never quite works out the way you intend with unlimited, but or perhaps you change the offer, or you give them a registration wall, or you promote newsletters. So it's maybe more of a lesser commitment, in terms of, what do you do to that customer if they're not really at that high propensity level.
Right.
But
Gotcha.
to your point, what's kind of counterintuitive in some ways with sort of setting that optimal meter setting. And again, we published this in a few places, so I think it's out there. But you set the meter pretty aggressively or pretty tightly on those high propensity readers. You set the meter kind of less aggressively in the middle propensity or low propensity. Right. And the counterintuitive part is you set it aggressively on those first time, kind of so-called first time readers. Right. And there's kind of two reasons for that. One is, just the, a first time user, it's a low risk prospect. So, even if you have a meter of 1, on average, flybys read 1 article. So you're not really, not necessarily risking too many page views. So it's almost kind of a bit counterintuitive in that regard. The other reason is that there's actually quite a significant chunk of people who convert, if you look at the data, from that first time kind of flyby reader. And the reason for that is just the way that tracking technology works today. Because you have anonymous cookie, right? As you know, you can reset that cookie and all the things that are problematic about first-party cookies or even third-party cookies. And it's actually, sometimes it's a repeat user masquerading as a flyby. And again, we see a pretty big chunk of conversions sometimes happen from that flyby audience. So again, it's almost like this kind of parabola of, you have a tight meter setting for the flybys, tight for the highly engaged fanatics, and then kind of moderately set meter in the middle.
Oh, that's interesting. Yeah. Okay. So maybe it was something that we read about on your website. I'm pretty sure we saw it in another article. But that's, smarter paywalls that treat users differently are definitely an increasing trend that we're seeing. Okay, let's get back to the story here, and because I want to hit all these graphs and the main bullet points. So the next one, the future business model for local, regional, and national newspapers. For this point, I just kind of wanted to ask, are you saying that the majority of newspapers in the U.S. have between 500,000 and 1.5 million unique monthly users? Is that what this chart says?
Approximately, yeah. And again, we don't have every newspaper in the database in America, but we do feel it's a pretty representative sample of, again, and you would imagine there's one New York Times, there's maybe top 15, top 20 major metro areas that are probably in that top 15, top 20% of publishers. Then you have like the long tail of kind of the small and especially the hyper local newspapers. Right. So yeah, I'd say the majority are definitely in that smaller size range. And that's, again, in some ways that represents the benchmark data we're showing here.
Exactly. Yeah. So we do get to that in the next point. So kind of set this up earlier, but just to come back to it. So you're asking the question, what is the potential for digital subscription revenue for a publisher with 1 million unique visitors? The New York Times is much more than that, right? They're on a wholly different scale, but they're 5% conversion. So that's 5% of their monthly unique visitors become subscribers. And that's what you're calling the saturation rate, correct?
Exactly right. Okay. And they are, again, what's interesting about this market opportunity research that we're doing is it's still kind of a, that S curve that you kind of see in the starts and stops and that shape, that's kind of universal for almost every industry, every kind of product. You have this sort of initial period of, you're kind of figuring things out, you're not really growing. Then you have almost a inflection point, then you have a hockey stick almost for a while.
Right.
And it kind of plateaus, and then, you kind of figure out other ways to either, add another S curve, or it's sort of on the print side, it's more of how do you manage the decline as it kind of goes down. So that shape is pretty universal across every product. And then the interesting part for newspapers is, we have data, in 2021 to date of what has happened. We can try to triangulate kind of, on average, the industry is maybe somewhere in the middle of this curve. Some publishers just starting out or at the beginning. You have those that are, and there's an article about the Boston Globe, since they brought them up last few minutes ago, where they're kind of plateauing a little bit as well. They've kind of reached perhaps a point where, the news cycle is not as aggressive as it was with all the Trump stories and the pandemic's kind of winding down. So again, there's a point. It depends where you are in that curve, but you can kind of try to figure out if you're, as a way of setting goals and figuring out where you are, is if you say the target is 1.5% or 2% or 3%, you figure, okay, if I'm here today, I still have this much more to go. And that gives me 5 more years or 2 more years or 10 more years until I reach that saturation point.
Right. Yeah, that's interesting. So just to summarize, you're saying this graph is like an industry average of what you would project of all newspapers, no one single newspaper, but on average, we're going to be seeing the saturation rate in the next 10 years.
Right. And we again, based on the benchmarks at the time, it was around 1.5% has been kind of where folks are today. I think at the top end, and that's the median. So that includes people who are at the very start of this curve and those who are really mature. So if you look at that most mature category, which I don't think we put in the article necessarily, but if you look at that kind of top decile or top percentile of newspapers who we think are plateauing, or we think I've kind of reached that max, they're around the 2%, 2.5%, at least for the local kind of newspapers.
Okay. So that's the number for like a weekly newspaper with 100,000 unique monthly visitors.
As of 2021, November 17th, that's the number that we're seeing. The interesting thing, again, I kind of keep dancing around is
no doubt. Yeah.
Is that truly the end of it? Or, we see a lot of those folks who are at that point plateauing. Their next sort of evolution is, okay, how do I differentiate my products more? So to your earlier point about product features and, what's the value proposition? Well, you have your digital basic or maybe digital all access. Can you spin off a sports vertical? Can you spin off a food, food and restaurants, lifestyle? So there's all kinds of interesting things you can start doing. Or you go the other way and say, hey, there's a super all access premium product that includes print, digital, magazine, other value add features. And again, I want to also be recognized. I know not every publisher can invest and kind of support that level of product differentiation, but that's the question that we get a lot now is if you're at that 2%, 2.5% saturation, how do you grow if you can? And in some ways, the New York Times has shown us that you can keep growing up to 5% or even more as you differentiate. In their case, they spun off crosswords, they have Wirecutter. So they're growing not in their news kind of category, but in these other peripheral products.
Exactly. Yeah. And I have some, we're kind of studying these models all the time. So I personally signed up for a New York Times subscription and, saw all the upsells in the process. Every one of those premium newsletters, like cooking, I'm still getting those now, but I can't access the content because, they gave me a free trial as part of my other subscription. So yeah, they're no longer all access. It's all access for the core news product, I guess you could say. But like you said, they've spun off these other verticals that they can, monetize just on their own or maybe as a bundle with everything. I mean, this is why we're really focused on the audio product. I mean, I really think that our publishers could position that as an add-on, audio only subscription And, now that's a whole new revenue stream for people, that maybe only want to subscribe to the audio. And then again, they could package it with the text subscription and increase the price of the all access. So these types of things, definitely, the New York Times is a leader in this. They actually are launching an audio only app as well. So we're really watching what they're doing and try to mimic it on a much smaller scale. Anything else you want to mention about this graph, or I have a couple others I want to go over?
No, I mean, just I think, the other key point here is just at some point you reach that equilibrium state where you're kind of your starts equal your stops. So that's obviously when you plateau is when basically you're bringing in as many as you're losing on a weekly or daily basis. So that's kind of how we find that point, that the equilibrium point essentially of starts and stops is at saturation effectively. That's kind of how we're measuring it here.
Right.
But that's more of a peripheral point, just to wrap up on this chart specifically.
No, absolutely. Yeah. And you say this kind of curve is common for all industries, all products. Obviously the time scale's going to be different, but for this is kind of just looking at the whole newspaper industry adoption of just digital access. But it's interesting. Yeah. You kind of zero it out at 2021, almost as if like this is the 0 point and everything else is, kind of, I mean, obviously this is because that's all that you can do, that's the current moment. But to me, it's just like, it was flat before this. If you extrapolate backwards, it was flat. And I think that was probably largely true for the last 5 to 10 years in the industry. Is that fair? Like, if you look at the industry as a whole, like
effectively,
this has been initiated recently.
Yeah, I mean, essentially the point zero, or maybe let's say in this chart 2022 or shortly after 2021, in the way this shape, this is kind of the assumption behind this curve is that publisher, anonymous publisher A launched a digital subscription product in 2021, starting at 0 subscribers.
Got it.
And
got it.
It started to grow from there. So
okay, that makes sense. Yeah. So 10. Yeah. I mean, so again, we've got literally, we just launched some websites that had no website before. So they will be falling right on this graph. They line up with that timeline. Okay. So now let's take a look at this graph. Let's see if I had any specific notes on this one. So this is just showing you're going to get the most adoption up front. It's going to drop year over year until you reach your 2.5%.
Right. And this chart is basically the sister chart of the one above, where you kind of see either, and I guess the dates are a little bit off here, but I guess it does assume perhaps in 2020, I guess it does show a bit of that history where, and the reality is, I think a lot of our clients or, newspapers we work with, they did have some version of a digital product, but it wasn't quite kind of, it may have been an e-edition that was kind of a standalone app that wasn't really being promoted.
Right.
Or they had a website, but it wasn't quite, optimized for being subscriber first, or it was mainly an advertising, revenue source.
Right.
So really what this chart represents is, there perhaps was a starting point of some subscribers, but really investing in the digital subscription products right around 2021 for this hypothetical publisher, and then seeing that growth curve.
Right.
And again, that the kind of inflection point here, where the starts and stops have that hockey stick kind of in the prior chart. That's, to your point, that's where you see that huge growth in the total subscribers in this chart.
Right.
That's what happens where you reach that equilibrium point.
Yep. Yeah, that makes sense. Geez, I mean, these projections are so helpful. I mean, for us to be able to go in and make some estimates for a publisher, before they make an investment in a website. The thing, just a little bit of a plug here, the thing about us is the setup fee is almost, negligible. So, because we have a WordPress platform, we can spin up the websites pretty quickly. So the upfront investment is very minimal, but to be able to, project out 10 years down the road based on how old their website is, we're definitely going to try to integrate this into our marketing as much as we can, and certainly look at our data to see how this lines up. But this is an interesting metric, I think, and this is just about the end of the article. So get your questions in now in the chat. We've seen a couple, and I've addressed most of them as we've gone through. Now you say that this is helpful to me because, everything you based a lot of things on, that benchmark of 1 million unique users. So, and this was the highlight of one of our videos recently, the rule of thumb being that a publisher's newsroom should be 50% of the digital only subscription revenue. Can you elaborate on that or tell us a little bit more how you arrived at that figure?
Yeah, and just to be clear, we're not, it's a purely hypothetical exercise, so it's not necessarily saying to cut any reporters or to. This assumes there's no other revenue sources except digital subscriptions. Obviously, there's other streams that you can generate. So, but as a rule of thumb, in terms of having a reasonable margin covering other costs, technology, kind of fixed costs. And then you kind of back into, well, on average, it's maybe, a good profitable point to be is essentially your subscribers are generating twice the cost of supporting the newsroom. That's kind of a great place to be. And that's actually, I think, where, again, not to keep referencing Boston Globe, but I think they express similar things publicly where, they kind of reached a profitable state with their current digital subscriber base that they can support the newsroom, even if, print and advertising were more challenged than they are. So that's kind of where that just before I talk more about the data points, but that was kind of the exercise. The benchmark we're kind of introducing here alongside the saturation is that one per reporter per 70,000 monthly uniques. Right. So that benchmark I'd say is still a bit. We're seeing quite a bit of variation, and it's also depending on how you count that FTE. Is it a kind of a full-time embedded reporter? Is it kind of a freelancer? So there's quite a bit of variation in that number, but if you were to use just a midpoint, in kind of what we're seeing across the board of how many regularly contributing authors are producing content across that same data set in our benchmarks, and on average, how many authors are there per, unique users? Right. It gets to about 1 per 70,000 unique users. So that's another way to think about if you're a site of, a fairly small site, it's perhaps a pretty lean company, lean organization to support the newsroom. Right. But again, what it doesn't account for is, freelancers or other just kind of part-time employees who supplement the news coverage. Right. So that's kind of the trickiness here. It's really more of a art than a specific target we're seeing. I gotcha. Yep. Right. No, that makes sense. I guess then just a couple questions. Oh, you know what? We have one from an attendee. So let me answer this. You know what? Let's get to that in just a minute because that's a little bit of a different topic. Okay, so just to be clear, though, you're saying that it seems like you're kind of trying to position these papers to just think in terms of digital only revenue and imagining a business model that's digital only, I guess. Is that fair? Because you're not taking into account the print audience at all here. So is that kind of what's behind this? Okay. That's right. And again, as an economist, we like to kind of always create these hypothetical scenarios or this universe where all these conditions are met, just to kind of think through a point and describe, on the margin, if you do this, here's the shape you expect. Obviously, in our consulting work with our clients, we actually do the math of, okay, you have four main revenue streams. If you draw kind of a 2x2 grid, there's print advertising, print subscriptions, digital ads, digital subscriptions, and kind of what's the trend line of all of those. Right. And, how do you kind of optimize or, sustain revenue in ones where it's pressure, declining pressure? How do you maximize growth in the ones where you're seeing growth? So that's kind of the exercise that we go through. So if we were to make a recommendation to a publisher, it'd be much more, I think, customized based on their situation, where we think they are on that maturity curve, on that S curve, where we think they are with, their growth and, other revenue streams. Right. And also just kind of doing a benchmarking of their performance benchmarks. So, what is their conversion rate? What's their churn rate? So all those things kind of factor into figuring out what's the recommendation of, what to do next and et cetera. But makes sense. Yeah. And I know you could never make a broad statement that I'm about to
make myself, and you probably shouldn't, and I'm not going to ask you to, but like we're always, we've been pushing for subscriptions for a long time, almost just across the board, and it's just because, studies like this and the trends that we're seeing really indicate to us that there is a future for paid content, especially if it's unique. And, the thing is that we work with a lot of different types of publishers. So to make a broad statement like that is risky. I mean, we have super successful publishers that are free in print, they're free online, and they're focusing on advertising revenue still. So, what would you say to a publisher like that? Again, like if you don't feel comfortable making a broad statement, don't. But would you say that the industry is in general going to subscriptions and that publishers should consider that regardless of where they're coming from? Or do you have any opinion on that?
Yeah, I wouldn't necessarily recommend anybody do, anything specific in terms of their business model without really getting weeds. But I think to your point, there's always going to be publishers who are successful without a digital subscription, who have a strong advertising base, or they're able to monetize their page views better than perhaps a peer in another place. So there's nothing wrong with making money in advertising. I think that's and to me, again, this white paper is a pretty kind of purist sort of exercise, and let's think through this concept and get to kind of some conclusions. But obviously, we're also not saying there. One thing we see sometimes is almost as publishers shift to digital subscriptions, they kind of almost forget about print, or they forget that, hey, there's this other product out here that's 3 times more, effective in terms of getting yield or generating revenue today. Right. So don't cut it necessarily if it's still profitable. Maintain it for sure. But invest in digital, of course, but don't necessarily negate the print. Like there's still a ton of value in there that there's no reason to drop. Same for advertising. If you're generating ad revenue, then 100% keep it going. And again, to your earlier question on how do you manage that trade-off, that's part of the math that we do a lot, is sort of if you're introduced a subscription revenue stream on top of your advertising kind of base, how do you manage that risk, or how do you minimize that risk if you're seeing the advertising revenue plateau, or you're seeing some pressure from the market? So I think that I wouldn't necessarily say everybody put a hard wall tomorrow, but I definitely would say that the trend is towards digital subscriptions. And I would say do the math. We can help do the math. If it's not right today, then let's think through the criteria or market conditions where it does become reasonable. And if you want to experiment with it and be kind of careful, there's ways to do that where you can introduce a paywall very conservatively and can kind of set the meter settings where you're minimizing that risk for advertising.
Yeah, no, that's something that is the number one concern of publishers. So definitely want to address that. Well, I don't know what else to say, Arvid. This has been really interesting. Thank you so much for taking the time to join us. I've already taken 45 minutes of your time, so I think we'll wrap it up here. I think I've answered all of the questions. But you did just mention, and you've mentioned a couple of times, that you work with publishers directly. You do the consulting. So can you just tell us quickly at the end here a little bit more about that, what you can offer to publishers and how our audience can get in touch with you?
Sure. And actually, I don't know if you're seeing this. I've got a in the Q&A box. There's a question on.
I'm missing a question. Thank you.
Yeah.
Good. Okay, great. Yeah, sorry. I was just watching the chat. So let's get this answered first. What if they don't have any traffic yet? Any suggestions to reach that goal of 1 million visits? Yeah, that's a $1 million question, right? What have you seen work there?
Yeah, that's the toughest thing is, it's how do you grow that reach? So it's, it's the kind of the basic audience development tactics that I'd start with is, one, obviously have a website, have, content on there that's kind of, you're putting out there regularly, it's getting the SEO, optimized for, where you want to appear in the search results. If there's certain articles, the way you want to tag them. There's probably initially you're investing a lot in social media and kind of trying to reach audiences where they are on those platforms, and hopefully, get it into kind of bounce, or or switch from a Facebook link or an Instagram link back to your main website. On that website, have a newsletter offer, have a way to collect an email address, have compelling content to bring them back. So you kind of want to, it's not easy, I don't think, ever to build from scratch an audience, but we've seen it done, and it does require some upfront investments in, sometimes it's paid marketing, sometimes it's kind of just getting your newsroom to go out there and promote the product, sponsoring events, hosting events in your local community, introducing the brand to kind of, leaders in your city or your community. So there's probably a lot of tactics we can think through, but there's, it's not an easy task, but especially if there's not any traffic to begin with, it's kind of building a brand from scratch.
Oh yeah.
That goes into the brand marketing and brand development kind of exercise.
Right. Exactly. Yeah. We've seen recently two really unique cases. One was, again, no website, but they did have a Facebook presence of 20,000 followers. So we just linked up our social media auto posts so that every post on the website goes to that page, and that quickly drove the traffic over. But there's actually a customer that we have just signed up. They started a newspaper. It's a brand new print newspaper. So no branding at all there, no digital presence at all. You mentioned the paid content or paid advertising to kind of get the traffic up there. Have you seen anyone using Facebook or Google just to promote subscriptions and actually sell subscriptions to the site? Is there a good ROI there, or is it, I don't know if it would pay off.
Yeah, it's the, when we do our kind of channel analysis, so you look at social, search, direct, telemarketing, et cetera. The social channel is one of the toughest ones to really monetize directly in terms of ROI. So, for every dollar you spend in social, it's not the best return. We see search doing a bit better.
Okay.
In terms of order of kind of, impact, it's kind of like email, direct, search, and then social. Those are kind of the four digital channels.
Interesting.
I will say there's a couple of tools out there that we've seen from Facebook and from Google, and I blanked on the Facebook tool name, so I apologize on that. But I think Google has a tool called One Tap, and I believe what it does essentially, and it's still perhaps in kind of a beta stage. So I think it's just been released for a few publishers.
Okay.
But essentially what it does is it syncs your, login kind of registration system with the Google kind of Gmail account. And Facebook has a similar tool where you can kind of sync your Facebook account login with the registration system on the website. And it is kind of, if you're clicking an article from Google or from Facebook, and you redirect back to the website, you're not having to log back in to access the account or access the registration, credentials. So that's kind of one, and we've seen some pretty successful results in terms of just growing email addresses through those tools.
Okay.
But it's still pretty new. So I don't know. I'm not speaking out of turn on some product releases that haven't been out there yet.
Yeah, no problem at all. Always looking for ideas. We'll definitely look into that one, and maybe try it out ourselves. All right. Well, let me just make it one last call for questions. We had some great ones throughout. Okay, one more quick one. Have you ever looked into donations versus subscriptions? Is that a reader revenue model that's part of this?
It certainly can be, and I know for perhaps smaller communities or even kind of niche publications where it's perhaps more of a donor model, it can absolutely work. So I'm not biased towards any particular way of generating revenue from your content.
Right.
But I will say one thing we've learned is and you saw this happen, I think, with National Public Radio a few years ago, where they introduced, it used to be that donation drive where they have, they block off the week on the radio and they just hammer, donate.
Sure.
And then they introduced, at least in Atlanta, they call it the Cornerstone Society, I think, or Cornerstone. It essentially was a membership model. So you kind of just sign up to donate on a monthly basis or yearly basis.
Right.
So it's a recurring revenue relationship.
Right.
You don't call it a subscription necessarily, but again, it's a donation model, but it's kind of a recurring revenue feature to it. So
right.
If you do look into donations, I think it can be viable, and there's no reason not to explore it.
Right.
In terms of either or, if you're considering one or the other, I would say the decision is less about the revenue model and more about the content and your value proposition and who you are as a brand. So if you're, you know, if your brand is nonprofit, you know,
right,
advocacy, probably a donation model is probably the one to go. If you're a newspaper, I don't see why a subscription wouldn't work for you. That said, you know, we have seen success in both. So there's some newspapers out there who have a digital subscription, which is fine, yet they still have a donate button, or donate a subscription to a student or to a friend or to a university. So there's kind of ways you can kind of mix the two models together.
Right.
But yeah, the decision on kind of which one to use is probably depending more on the brand and your value proposition versus, you know, which one works better as a model.
Right. Yeah, no, that's a good point. It's been a theme throughout this. Every newspaper is different, but yeah, I like the recurring donation concept. I know we have a few publishers that do that, and so that's a capability on WordPress. All right, Arvid, again, thank you so much for your time. I'll let you go, man. You gave us a lot of insight on this. I really appreciate all your feedback, and we'll definitely be in touch about that API and other potential marketing projects like this.
I appreciate the time today, and yeah, don't hesitate. I think my email's, I'm sure, somewhere in the Zoom here, but reach out if there's any questions, or if you want to chat. I'm happy to talk about subscriptions and revenue and Atlanta football and anything else.
Right. Oh, so that's where you're calling in from, Atlanta? I didn't ask. Okay.
Yeah, that's right.
That's where you guys are based. All right, cool. I kind of picked that up. All right. Well, great again to meet you, Arvid. Thanks again for your time.
All right. Thanks, Matt.
All right. Take care now.